All the pro traders I know, they trade like this. That's why we're teaching it like this. So now I'm going to go over the Bob trade. Why is it the Bob? It's the Bob because we're 2-to-1 now. 2 ZB to 1 UB. Quick timeout, guys. Jonathan Rose, owner, Masters in Trading. Every single Sunday, I share trades in futures. Me and Pablo share trades in futures. The video you're about to watch is the exact trade that we shared yesterday, March 16th. Today is March 17th. So what I want to do is show you how these bond spreads work. So I'm going to play a 2-minute or 3-minute recording from yesterday where I walk through members through this trade. This needs to be learned. Anything worth learning does. If it's easy, it's bullshit. So listen to the video. You'll notice how this rallies, this comes off. I'll walk you through the reasons behind the trade. Before I get going, if you watch the videos, guys, if you like my content, please subscribe, give it a big thumbs up, and let's get into it. ZBUB, this is 2 ZB to 1 UB. In front of you, this is bond edge. Just like energy edge they were looking at before, but now we're using bonds. Again, for this one, I did a cycle to start in the beginning of the year, in the beginning of 2020. So if you were to buy the green line at the beginning of the year and held it until today, you'd be up 13 grand. If you were short, you'd be down 13 grand. Let me put this on a 2-hour chart. Put on a 2-hour chart just so we can see the data a little bit more clearly. The Bob, it's not the Bub, it's the Bob because it's 2-to-1 is up here. The knob, and here's the knoll. For those unfamiliar with treasuries and how to trade bonds, I'll just give you a quick run through. If we have 3 bonds of 10-year duration, 18-year duration, and 30-year duration, probably all going to be pretty correlated, right? Like right now, if we think yield, and I'm just going to estimate right here, the yield of the 10-year is what, 0.5? The yield of the 18-year is what, 0.6? 30-year, is it, I don't know, 1.2? We're trading the relative difference between these. The white line includes all this stuff. So the white line is all of this right here. This light blue line, guys, this light blue line is right there. And the 18 to 30 year, that's going to be our Bob. That's really up there. So what's going on right now is the Bob is way up here, right? Here's the Bob. Here's the knoll. That's what this is. But the Bob, guys, it's part of the knoll. The beginning portion of this spread is 10s to 18. That's here. But this is all the way down here, right? Here, here. Now, before all the volatility hit, a lot closer together, right? A lot better semblance of value. But because of the increased volatility, relationships are going to break down. And that's what's happening right here. These will eventually come together. This will rally. This will come lower. The other thing that could happen is this might get its butt whooped. That would cause this to come down here, and this thing would get absolutely annihilated. That's the second thing that could happen. What else could happen? Well, what happens if the knoll rallies? The knoll could rally like this. Boom, boom, here. That rallies a little bit, and now look how cheap this is. So for me, I like being short the green line. Watch that white line, though. If that white line starts turning up, maybe it turns up here, you got to hedge by buying that blue line. All right, guys, so now the fun part. Literally, the first recording was Sunday night, so really Monday was the first day to trade. But because we have these different relative value tools, they're spreading tools. You can see right here, down 10,000, down 7,000. So that's a $3,000 move in the knob. And the bob really up here, 10,800. Now it's at 5,875. So this had $5,000 worth of profit in just 2x1. So $5,000 from the bob side and about $3,000 from the knob side, 8,000 total. Really a day and a half. Very straightforward trade. This is what happens when there's volatility and markets get disconnected. The role of the trader is to wait around on the edges and wait for those dislocations to happen and then jump in. These proprietary relative value tools that we use allow us to see when those big dislocations happen. We jump in and there you go, guys. Basic 2x1, $5,000. Hope it helps. If you're not subscribed to the channel, subscribe. Check out the video description. I left some more information about relative value trading using the Edge series. Thanks, guys.